Investors have always been concerned about inflation, especially in the current times. Although we haven't had to worry about it during the past couple years, we have maintained it around the 2% mark, and that seems about right. But now, a lot of big time investors like Charlie Munger, Ray Dalio, and Michael Burry are all warning us that there may be an impending inflation in the near future.
Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started.
Munger insisted that if you print too much money, you might end up with the likes of Venezuela, the country that was dismantled due to their struggle with inflation. Burry also added that history, despite being in the past, is something we should acknowledge. This test explores the American inflation back in the 70s, which is actually pretty relevant to the present time as well. According to Dalio, inflation pressures are creeping in since the economy is rebounding. And it's not just them. We've got economists and investors from around the world foreseeing the rise in inflation as well. So we're going to start off with learning how to prepare for it. Let's go over a few of these warning signs that can indicate impending inflation. What people don't actually realize is that there are a lot of consequences coming with an oversupply of money being printed. Recently, we've had to go through a pandemic which caused a lot of economic crisis for everyone. And a lot of people, needed money. So the government had to take matters abruptly and basically gave away free money. Yep, free money. Trillions of dollars were given to several companies who were knee-deep in loans, had shortage of emergency funds, and had the general need for cash. They were also able to spend hundreds of dollars in tax relief for workers as well as government needs. But you're probably wondering where all this money came from. It was like money actually was growing on trees, since the Federal Reserve continuously printed them, basically creating them out of nothing. How we wish it was only that easy to magically solve our general lack of money, but like we said, too much of printing it has a definite consequence. One of the major problems of it is inflation, of course. When you start giving away money to people, they obviously use it to go on an unlimited spending spree of everything. This can cause demand of different goods to actually rise, and from the basic of economics, once the demands of the good rises, the price rises as well. Like what Munger said, we don't want to end up like Venezuela with their fight on hyperinflation. This isn't the sole variable that's causing warnings of inflation, however. The other one is the aging of the world's population. Back in the 70s, the much younger population outnumbered the number of retirees, with a younger age group over twice the size of the older generation. But in present times, they're almost the same in comparison. Its ratio is almost becoming the complete opposite of back in the 70s. So a lot of these economies are showing a decline in the working population. We have developed Asian and European countries both showing the same data. The only country that seems to go the opposite way is Africa, one of the poorest continents in terms of economy. Now, this decline has a very crucial impact since when you get smaller working population, the ratio to production of supplies and goods also become less. This results in an increase in the price for labor, and frankly, the businesses who utilize labor transfer this cost onto their consumers. In short, prices of goods and services go up, and this is what we call inflation. Inflation has not always been a major problem in today's economy. The last time inflation was high was in the 80s, a decade where investment or knowledge on investments were not yet that known. We are not used to seeing the value of a dollar become lesser, nor have we faced the crashing of stocks and bonds. We don't know what it's like having assets destroyed due to inflation. So we should probably take note which assets classes might do well in an inflation situation. So one of the best choices in a time like that is buying real estate. Although when buying real estate, you're also getting in a lot of debt amounting to $750,000. So let's break it down for you to understand further. In an inflation scenario, the worst asset class is cash. This is because the value of the dollar is continuously decreasing. Next, we have debt, which has the very definition opposite to cash. So instead of losing so much cash, you'll be losing the amount of debt in the process, making it smaller. That's just one of the advantages in investing in real estate. And the prices of the house, obviously it goes up considering inflation is the increase of prices and goods, including houses. Not only that, your rental fees can also increase, another double win for those investing in real estate. Now, real estate sounds like a good way, but it's not the only way you can profit during an inflation. Another asset you can consider is gold. Let me tell you how these shiny bars can profit you during inflationary periods. Like mentioned before, the value of cash drops, so people would want to hold on to cash but instead look for alternatives. The question is, what other assets are there that retain their value, have limited supply in the market, and cannot be easily devalued? The answer is gold. During inflation, investors literally go for gold. Looking at history, the last jump of inflation was between the 70s and 80s, and records show that during these times the price of gold skyrocketed from $250 to $2,000. This is concrete proof that gold is one of the strongest profit sources when it comes to an inflation environment. Now, the other thing that investors are most likely to flock to in cases of inflation is cryptocurrency, such as Bitcoin. We know not a lot of people can put their trust in Bitcoin, especially with their money, and we don't have enough historical data to prove its sustainability, considering it has been around for only about 10 years, give or take. But Bitcoin also has its perks that we will explain to you now. Since the value of the dollar is becoming less and less, people would be looking for other currencies, with Bitcoin being one of them. This is mainly because Bitcoin's value cannot be watered down due to its definite supply and amount in the system, which is around 21 million. So there is obviously a big chance of Bitcoin becoming big once we hit hyperinflation. So we've talked about the alternatives when it comes to fighting inflation. We have real estate, we've got gold, we also have Bitcoin. These assets are ones that will do well in inflationary environments. The other thing that you need to be aware of is which stocks perform well and which ones won't. To learn more, let's take a look at the top of the modern investor in the world, Warren Buffett. Stocks and inflation are not unfamiliar to Buffett, as he has talked about them before. During high inflation rates, he shared 3 key things that we'll have to look out for when it comes to looking at stocks. The first thing is the ability to generate rather than consume cash. The second, companies that have the ability to increase prices along with inflation. The last key thing is buying companies that can accommodate large dollar volume increases in business with only minor additional investment in their capital. Like Coca-Cola, for example, one of Buffett's long-term investments. In inflationary times, they can also raise their prices easily as the prices of the market go up with inflation. And we all know they are a company whose cash flow from their products is doing well. Another good example is Sanderson Farms, who can easily increase their prices of their chickens during an inflation and generate good cash flow in the process. These kind of stocks are the ones you can bet on if we were to encounter high inflation in the future. Although we're not putting inflation in a good light, since it can be a miserable time and can cause a lot of stress to your finances, according to Thomas Sowell. Hyperinflation can empty your savings without even the government raising their tax rates at all. But it's not always the case, so we hope you learned a thing or two in which direction you should think of heading during high inflation. With the right kinds of stocks and investments, you don't just save your money but generate even more. Inflation does not necessarily have to be a dark cloud on your finances. You just have to be smart about where you put your money so you can come out winning in times of others losing.
Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video!